Let's now have a look at the Australian dollar and see how we're faring. It's looking pretty sticky at the moment, around that 73.50 mark, heading into Governor Philip Lowe's speech this afternoon. We could see a bit of volatility. And for a read on all the economic outlook, Clifford Bennett from ACY Securities joins us now live. Clifford, great to have you on the programme as always. Australian dollar, let's start there. It's looking pretty sticky at the moment, but we could see some volatility maybe this afternoon.
Good morning, Cara. Yes, the governor isn't likely to say anything too hawkish at this point. He's probably likely to reassure people that he expects a sharp rebound for the economy. That could be a little bit bullish for equities and the Australian dollar. But he really is, we see the Australian dollar there sitting on the edge of what I call a bit of a cliff there if it makes a new low. It could be a sideways consolidation period for perhaps a couple of weeks. But coming back to the governor's comments this afternoon, he is likely to be gentle in his comments. So not really a commentary that will support the currency, given that relative interest rates, even though they're low across the world, are becoming a more sort of dominant feature of sentiment of late. So a little bit of weakness potential there for the Australian dollar over the next couple of days out of those remarks. But of course, the inflation figures in the US tonight will have a probably far bigger bearing on the course of the US dollar, and that will impact the Australian dollar. Overall, the Australian dollar, I think, is still a currency in trouble. We've seen a little bit of a global sentiment to sell Australia of late. That could gather pace as things move forward.
Yeah, those CPI numbers, a big data point on the docket, Clifford. What are your expectations?
Well, I really don't think it matters whether it's 5.2 to 5.6%. Previous number was 5.4, market's expecting 5.3. Anywhere in the 5.2 to 5.6% range is still a great concern. And I think the risk is not so much we drop below 5 in the weeks or months ahead, in the months ahead, but more a risk that we move above 6 in the months ahead. We just saw extremely high inflationary expectations by consumers data come out yesterday, and we've just seen the highest wholesale prices inflation data in Germany for 47 years. So those people who think inflation is transitory really need to think again. This is an ongoing phenomenon, and it still has a long way to march. So inflation staying high, moving higher on a trend basis, really regardless of what tonight's number is. I would tend to think the market is sort of factoring in a slightly too low number. What most economists at most of the banks tend to do is sort of just move a little bit from the previous numbers so they don't risk getting it wrong. It's more of a play safe forecast that they make on these big data series. But I think if you're looking out the window, you'd have to say that there's still significant risk to the upside for inflation in the United States.
Clifford, let's have a look at the local market expectations for today. We're pointing down in the red when we look at those SPI futures. Any thoughts from you?
Yes, I think it's potentially a bear market for Australian shares. We've been warning that people needed to have active hedging strategies in place for downside risk. September, October, even into November can be a risk period for equities historically. Plus, you've had almost all the good news you can possibly think of having previously been priced in. You look at that ASX market there, the AUS 200 chart, and we've been weak for a couple of months now, and people still like to think we're in some kind of bull market. It's nice to see a little bit of a rally yesterday, but that rally was on the Biden, the two presidents, China and US, having a good conversation. And as with Europe, Europeans are complaining that Biden says good things in meetings and then doesn't do anything or does the opposite afterwards. And now China is complaining that it was a really positive phone call between the two leaders. But then today Biden's announcing inquiries on trade and questions there. So China's starting to have the same problems with Biden that Europeans are. So I don't think there's any real silver lining there for quite some time. The local market, of course, is hyper overly optimistic about coming out of lockdown, that roadmap. And I think that roadmap is vulnerable to disappointment. The Premier of New South Wales, for instance, yesterday saying the unvaccinated are not guaranteed access to hospitality. I think we already knew that, but she forgot to say that the vaccinated aren't guaranteed either if hospitalizations go through the roof. So I think there's some tricks still ahead of us. And of course, on the mental health front, people are still suffering. We need to come out of lockdown, there's no doubt about it, but we need to do it without a sole reliance upon vaccinations. I think the government's starting to get the policy mix to more appropriate levels. Let's hope the roadmap works, but I see potential market disappointment there.
So that backdrop, Clifford, the gold trade, it's still on, is it?
I think it is. Kara, can I just interrupt for a second? Because I know your audience is full of really powerful business leaders. Something very nice that Felix Chang and ACY Management Group did lately, and I'd suggest this to all the business managers out there for their staff, is send a little gift package out. I mean, unexpected, arrived in the mail. It was really nice. And I think those sorts of gestures by companies towards their hardworking staff at home should be encouraged. On gold, thank you for that. On gold, I think gold is a long-term buy here. It's been building sideways. We've talked about this sideways consolidation pattern. If you looked at a weekly or monthly chart of gold, you'd see a much bigger triangle. We're in the middle of that triangle at the moment on a massive quantum level. We could drift sideways here for a week or two. We could even have another slip lower towards that lower trend line support there. But any movement to the upside could be the beginning of something very big, lasting 6 to 18 months, perhaps 2 to 3 years. So a little bit of patience in this sideways volatility here. But overall, I think gold has a very solid outlook, probably going to $2,500 as a minimum target. That's a medium to long-term target, minimum target, and perhaps a lot higher over the next 3 to 5 years. So a very solid investment for its industrial demand, for the ever increasing luxury demand, and also as the world's best hedge against Delta or any of the worst case scenarios there that could evolve on further variants of the COVID situation. Hopefully none of that will be the case, but I think gold will be sideways to higher regardless of any further COVID variant surges. But if there should be the disruption to the global economy that I think is ongoing at the moment from just the Delta variant, I think gold is a good buy.
Clifford, always great to chat with you. I'll let you go enjoy. I think I saw a bit of champagne in that parcel, so go enjoy. I hope you have a great day.
It's a whole treat, but thank you, Kara.